All right, folks, we are back. He is back. The man, the myth, the legend, the one and only dark trader in this crazy world called the stock market. The one who calls it as it is, tells it how it is, and is going to tell you how it was. I'm not even making sense, but he does. Is my man Dex, the Algocapitalist. Dex, what's up, brother?
What up? What up? What up, people? It's good to be back.
It's great to have you back, man. It's been a crazy schedule with me. We missed you a few times, mostly my fault. So glad to have you back, man.
It is awesome, my man. Absolutely awesome. I missed you.
I missed you. I missed you, man.
I know people were starting to talk, and I told him, I said, "Look, it's all good. This way, sometimes absence makes the heart grow fonder.
That's it, man. The
So it's
bromance is
all
back.
it's all goody. Here you go."
Yeah, brother. Where do you
And the
want to
funny
begin,
thing,
bro?
man,
Take
it's
us.
so
Take
much.
us where you want. I mean, there's so much stuff happening, man. I mean,
Yeah, it
go where
is,
you want
man.
to go. I'm gonna cut you loose.
All right. Well, first things first.
Yeah.
For those that are um, registered on my Twitter, so you get my tweets when I send them out. If you were paying attention, last week I sent out the intraday price inflection point for the Bitcoin futures for the reversal. That turned out beautifully. And then I sent out this morning another tweet warning everybody where the intraday resistance was going to be on the price inflection point. And someone just told me in the trading room that I think it was on Bitfinex on one of those exchanges. The intraday price inflection point on the resistance level was my price exactly before the market
Bam.
turned. Yeah. That's the power of the pulse waves, man. That is the power of the pulse waves at work. So, for those of you who are not on my Twitter, you gotta come on over and follow me on Twitter because from time to time I do put those intraday price inflection points out for the trading room first, and then I send a tweet out. All right. As far as that is concerned, people want to know what's going on with Bitcoin. Have we hit a bottom? Is that what's happening? For the rogue money folks, let me lay it down to you straight. No, we have not hit a bottom. We have put in what is called a short-term bottom. On the Bitcoin futures, though, that bottom is way, way, way down at 58.80. All right. That is the short term low
I agree.
bottom support in the Bitcoin futures. Currently, we are at 88.10. All right. So where do we go from here? All right. On the daily chart, if we were to close right now where we are today, then we could actually say that another bottom has been put in and that the market is ready to retrace further. I'm in the camp that thinks that the market still has a little bit more it wants to try to go. And the initial target right now is at 93.24. However, it's not a guarantee that we're going to get there. And even if we do get there, there's a high probability that there is at least a couple of thousand short tickets right around that 93.24 area. So you could see a massive flash crash type of a price action happen in the Bitcoin. So that's just a heads up on that initial target. Now, if there's enough steam underneath here, you like that? So I said steam. Steam is a cryptocurrency.
Love it.
Corny little segue. If we get enough steam underneath here, then the trend line resistance is at 10,752. And for the record, Bitcoin has been having a big problem with 10,000. All right. So right now, as it stands, the market is in retracement mode. This is day number 4. And I have to tell you, the warning signs for the intraday price inflection point I put out is a strong resistance. All right. That 9,000 is a big deal. It's a big deal for multiple reasons. Number one, it's a big deal from the technical analysis perspective, but it's also a big deal because it coincides with the bottom of the Kumo cloud. and that's usually a very strong resistance. So it looks like price action is probably going to bump its head around the 9,000 level and then return back down again. Once this happens, though, it looks like the support is going to be at 85.09, and I don't think that price is going to hold. I think prices are going to fall back down and retest that 58.80 low. So that's where we are right now. The only way that we can escape this, at least for another week, the only way we can turn things around is that the Bitcoin futures need to close above 93.12 this week. If it can do that, then the race is on, and the market will retrace further. And on the weekly chart, the initial target on that is at 12,000. So Bitcoin right now is at a crossroads where it needs to do some things. But right now, I don't think you're going to see any more rallying today. I think we've hit that resistance between the 88.30 and the 9,000 level. And that's just the way it is, folks. And it's going to drag the rest of the cryptocurrencies down with it. I've been saying that all along, that the Bitcoin futures is the proxy for the entire crypto space. You don't have to like it. It's just what it is. And so as goes Bitcoin, as goes the rest of the crypto market. Not saying every single coin in the 10,000 list of coins. I'm just saying overall, in general, the Bitcoin is like the Dow.
Hey Dex, do me a favor. Could you give out that that ticker for the Bitcoin future again for those audience members that haven't heard
Bitcoin
it?
futures. It's on the CBOE, and the ticker on the Thinkorswim platform is /XB like Bravo, T like Tom, XBT.
One more time.
One that we track. It's X like X-ray, B like Bravo, T like Tom. And on the Thinkorswim TD Ameritrade platform, it's / in front of the XBT.
Yeah. Got it.
Yeah. Now, someone just mentioned in the chat, and that was the next thing I was going to address. So you beat me to it. So here we go. They want to know as far as the metals and the bonds. All right, I need to break something down for everybody on these bonds. I've seen YouTube video after YouTube video, people talking about the bonds. All right. First of all, let me just say that those that are calling for bond market collapse and all this other stuff is a day late and a dollar short. All right. It's just, it is what it is. Day late and a dollar short. Where were you back in 1999 when bond prices were below par? Where were you then? I didn't see none of them folks coming out saying nothing about no bonds. Now, guess what? There was no YouTube back then, but still, bonds were trading below par, folks. They were in the 90s. As a matter of fact, the US dollar index at today's price of 90.33 is higher than the bond prices were in 1999. All right. So keep that in mind when you talk about bond prices. Now, when they say, as far as the collapsing of the yields and things like that, there's a few things people need to understand about all of this smoke and mirrors that people are putting out. People love talking about collapse, man. Collapse of this and collapse of that. It's like if you just type in the word collapse, you'll get a zillion different things on your Google search talking about, something collapsing. All right. They talk about the collapse of the ozone layer. They talk about the ice caps collapsing, in cold places. They're talking about, the collapse of somebody's hairline, the collapse of World Trade Building 7. There's always a collapse somewhere. Okay. There is no collapse. All right. The world still went on when the bond prices were trading below par. You had bonds below par, and the market and the economy was roaring along. All right. It wasn't until a year later that the dot-com bubble bursted, but still. All right. It is what it is. And then you want to talk, going into the 80s, the late 80s, and the early 90s, I mean, people were paying 22% interest rates. And the world kept going. And the housing market, homes were still being thrown up left and right. And property values were still shooting up through the roof. All right. So this has one thing has nothing to do with the other. The bond market is in a bear market right now on the price, as far as price is concerned. When people talk about coupon rates and things like that, you need to understand sovereign wealth funds and large hedge funds, institutional clients, they don't trade bonds. All right. They buy bonds, all right, because they like to hold, debt, corporate debt, government debt, whatever, sovereign debt, whatever. And it appeals to them, especially when the rates are where they are right now. They know that there's a high probability of them getting back their principal plus that interest, so it's a safe bet for them. All right. What people who are mouthing off on YouTube who don't know what they're talking about is comparing what I just said to the futures market, which is a trader's market. All right. One of the questions on the securities exam was dealing with this very subject, dealing with an individual who had a couple of $1 billion in bonds that he needed to hedge. Notice I just used a big word. It's called hedge. He needed to hedge his position. So what does he do? What is he going to do? All right, rates are rising, and the coupon on his bond is low. So who's going to want his little bond when they can get better yields in the market today? Now, this big fund is not going to go and dump the bonds and trade them per se. No, that's not what he's going to do. He's going to go into the futures market and hedge his position. All right, that's what people do, folks. That's why they created this Bitcoin futures market for those who don't know. And I don't want to be disrespectful. I'm not going to call people idiots or call them stupid. I'm just going to say they're ignorant of some facts. That means you're unknowing. You don't know what you're saying. So let me help you out. They created this Bitcoin futures first. All right, for the obvious reasons. One being that it was the most expensive crypto that was out there. Two, all of their hedge fund buddies on Wall Street had direct exposure to the Bitcoin itself. And three, they needed a way to hedge their positions. See, hedging is for people who are not looking to necessarily relinquish their physical holdings in said products or commodities. That's why they hedge, all right? Because they're not trying to liquidate right now. They want to liquidate at some point in the future. All right, so you have to keep that in mind. So China's not dumping bonds. If they hold, let's say $1 trillion in United States bonds, whatever, they're not going to go and dump all those bonds on the bond market and take a huge loss. No, 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 no. They're going to go ahead and flip it over to the futures account while they're holding their physical bonds. And they're going to start shorting the mess out of the bond market, the futures bond market. The futures bond market is so deep that you cannot move that market easily. So they can go in and they can put in and hedge $1 billion worth of bonds easily in the futures market without risking as much. Not only do sovereign wealth funds do it, but producers of commodities do it as well. ExxonMobil and Chevron and other people like that, they go into the futures market and they buy and sell crude oil futures contracts to hedge themselves. All right. Your grain producers do it. Those that produce and process grain like corn and soybeans, they'll go into the grain markets, futures markets, and they go in and do what they got to do. All right. So that's what keeps the markets flowing correctly. All right. So all this chatter about, oh, the bond market's going to collapse and it's going to, no, it's not. It's not going anywhere. Remember, at one point, bonds were trading below par. They were below par and the interest rates were through the roof. And the world kept spinning. So that's what's going to keep going on, folks. Bonds on the bear market. Get over it. We're at 143 right now. The market is kind of stabilized between 142 and 143, 144 top side. All right, so you got 2 full points of sideways market action off the lows. Big deal. It's not the end of the world. You should have been crying end of the world when the bond markets was in the 170s and 180. Nobody said nothing then. They was loving life. But now all of a sudden the prices are entering into a bear market, and now everybody's scared to death and want to talk about the sky is falling. The sky is not falling, people. That's why I push and push and push and say, people, please learn how to trade the markets so that you can understand the markets at least. All right. Understand how things work before you just start flapping off things that you don't understand and don't know. All right. Now, as far as the stock market, people have been talking about that too. Oh, there's a golden death cross on this and that, and here's why the market's about to roll over. Let me tell you what it is. The market will turn from bullish to bearish when it feels like it. All right. All this talk, and it still hasn't happened. The Dow has a 1,000 point trading range right now. So let me put that in perspective for you. The Dow can fall 1,000 points today and still be in a bull market. Fall another 1,000 points the next day and still be in a bull market. Because that is the new trading range now for the Dow. It's no longer 100 points. It's 1,000 points now. That's the level of risk in the Dow now. It's 1,000 points. And guess what? The NASDAQ has returned to pre-1999 levels, which is a 200 point trading range, average trading range. And the S&P back to 100 points. So that means at any given time, if you're trading in the E-mini S&P 500 or the NASDAQ or the Dow, you're looking at 1,000 points of possible risk in the Dow, 200 points of possible risk in the NASDAQ 100, and 100 points of risk in the E-mini S&P 500. And what that means, risk means that the market can swing and move in that direction, that many points, and flash crash speed without having any damage to the market whatsoever. Y'all need to understand what I'm saying to you. The trading ranges have been expanded in these markets. All right? And get ready, because now they're pushing to bring your boy on board. Who's your boy? Arguably the number 2 currency out there. Ethereum. They're bringing your boy Ethereum to market, making a futures contract for that. And if my hunch is right, they're probably going to roll that out and a few others also. They may roll out about 5 of them. So just be ready for that. That they are coming. More crypto futures markets are coming. Hello? Somebody said they can't hear me.
I can hear you loud and clear, bro. You're live.
Okay. So basically, what's happening is
you're coming through. It's coming through perfectly. It's probably on their end.
Okay, cool. All right. So anyway, as far as what does this have to do with the metals? Well, it's funny because as the Bitcoin has been coming down, right? People have been talking up the metals again. It's funny the way the crowd swings and ebbs and flows. When cryptos was on fire, everybody was like, man, forget gold and silver. I'm dumping my gold and silver and buying Bitcoin or whatever, right? Now Bitcoin has smacked people around, you know what I'm saying, like a stepchild. Now they're talking about gold and silver and miners again. So you've been seeing a little action in the miners. Well, here's the problem though. Gold and silver may rebound and rally a little bit from here, okay? However, the miners are really struggling. Look at the GDXJ and the GDX. They are really struggling to get something going here. And there are a lot of reasons for that, but I primarily look at the price, and the price says struggle. It's for whatever reason it's
Hey
struggling.
Dex, could you kill your cam? I think your logo's not showing properly. Go ahead.
Kill my what?
Your camera. I think your camera's on or something. Your logo's not coming up. It just says Algo on there. Your typical Wall Street bull logo is not showing.
I have my camera covered at all times. So let me see.
That's weird. Hold on.
Hold on.
Oh, there
Okay,
you go.
that's on. Now I turned it off. Can you see it?
Yeah, that's better. Yeah, turn it back on.
So when I turn it on, you can see it. Okay, there
Yeah,
it is.
I
Full
see the
logo.
logo.
Okay.
Cool. All right, cool. All right, good.
Okay, cool. All right. So we on the same page? Okay.
We're on the same page, brother. Go ahead.
All right, cool. Yeah, so for whatever reason, it's just a situation where the miners are lagging the metals this time. They're not leading the metals, they're lagging the metals. And just like I did in my last previous video, silver, man, it's caught in this sideways trading range, and it's just stuck. It's not in quicksand anymore. It's in mud. It's deep, heavy, thick mud, and the tires are just spinning. It wants to run, but the tires are keep spinning. And here's another thing too, folks. I don't think the manipulators are in control of the precious markets anymore, the precious metals markets anymore. I think for whatever reason, that has been that program that they were doing, dumping the metals like they were doing. I think that's pretty much over now. I'm gonna tell you why I think that's over, and now I'm gonna also tell you why I think that happy times are here again for the metals, and eventually the miners will catch up. That's because, and I can hear you V already. I can hear V coming in right now. Your boy, our president of the United States, Donald Trump, has done away with that ridiculous law that hamstrung the banks from doing the kind of lending and operating the markets the way they wanted to. So, with that being said, with doing away with that Dodd-Frank foolishness, I think you're going to see the boot finally get taken off the neck of the precious metals and the miners. One of the reasons that the metals also, entered into this long-term bear market is because when that Dodd-Frank came out, they absolutely put the brakes on the silver rally. Remember when silver hit that $50 and basically turned on a dime? That's because the Dodd-Frank rules kicked in. And at the time that happened, they took away spot metals trading in the United States. All the Forex firms were offering it, and you could trade the metals, the spot metals, and they made it stop. Well, now that they have repealed the Dodd-Frank rules, the banks are able to come and speculate in those markets again. Now, I got to prepare the people for this too. Don't be shocked and surprised if you start seeing those crazy mortgage loans come back. Because once you repealed it
here, man.
So have you seen the
wire loans? They're back.
So the Ninas and all those will come back. Yep. No income, no asset.
Yep. Those are coming. Those are they're already doing it in California. It's happening.
The wildest ones I saw when I had my mortgage company was the 150% loans. Yep, they start off with 103, then 107, then 110, and then after the 110, they hit a 150 briefly, and then that's when everything went topsy-turvy. But yeah, those loans were ridiculous. Those are coming back, folks. Dodd-Frank is out of here. What I really hope to see is the resurgence of the spot metals trading, because that will be great if you can do that again in the average Forex account. That would help. What happened was the spot speculation was helping to boost the futures speculation, and that's what helped push silver to $50. Now that the Dodd-Frank's been taken away, I think that we can exceed that again. I think you should see the gold and silver really start to gallop here, because your interest rates are going to continue to rise, because these bonds are going to continue to fall. Now I know one thing has nothing to do with the other. You're talking about interest rates on your investments on your bonds versus the rate that the Fed hits the banks with for borrowing. Both are going to start going up, and it's just how it is. We have a new chief over there at the Fed now who basically says, "Yeah, we're going to do something different. I don't see a problem raising rates 4 times this year." Of course he doesn't, because he sees the bonds are in a bear market. As long as bonds are in the bear market, it swings the door wide open for the Fed to do other things with rates without any really bad repercussions, because the bonds are already in a bear market. So he's going to do it, and you have to be prepared for that. When they do that, though, that should actually help also lift the gold and silver, because people have been crying about inflation, right? Well, inflation is the friend of gold, right? So the higher the inflation risks, the higher the price of gold. So right now, gold is just struggling between 1300 and 1320. It's just stuck in the mud like silver. It can't really do anything. It's in a bullish position. It wants to take off and run, but it can't. It just can't. So I agree with Tom in the chat. He says the Fed will not raise rates 4 times, in his humble opinion. I have to agree with you. But on the flip side of that, I believe they are going to do it because they don't care anymore. And aren't you seeing that? They're already signaling to us they don't care anymore. They let the Dow close down 1,200 points to shock the public. They've never allowed that to happen before. Yes, the Dow has had intraday moves where it moved 1,000 points before in the past, but they always brought the market back up to a sustainable level. This time in 2018, they don't give a darn. They don't took the gloves off and said, let her rip. No circuit breakers, none of that. No circuit breakers were tripped when that happened. They don't even care anymore. As a matter of fact, they don't care so much. They have allowed the artificial intelligence software to run the markets. They've taken their hands off it. Just let the algos do it. That's what we programmed them to do. Let's let them do it. All right. So it is what it is, folks. Things I've been saying for years now are coming to pass. It is what it is. Artificial intelligence is being given more and more leeway to control the day-to-day tasks that we don't even think about.
And that's why Goldman Sachs put out the report that the next market crash or the next market situation will be caused by the market itself. Not
right. The AI is going to be caused by the AI.
Exactly.
See, think about it. Think about it. You have deniability.
Yep.
Because if you take your hands off of it and the AI does something, you can easily say the AI did it.
Exactly. Plausible deniability, my man.
There you go. But here's the funny thing.
We lost control. We never saw this coming.
I've talked about this before. I've talked about it before. I mentioned it in 2 of my documentaries that I've done, so I'm going to hit it again. The whole artificial intelligence meme is a lie.
Yeah.
It is a lie. It's a lie because they want you to believe that the artificial intelligence can act outside of its programming.
Correct.
As if it's an entity.
Correct.
All right?
That's what I keep telling people, man.
And it's not. Okay? Now, I'm going to break it down for you and show you
it's really
how they're right,
but
they're wrong. Now, it's more nefarious than that. The artificial intelligence that they're trying to condition the people to get used to is the type of artificial intelligence that is just programmed to take over, the day-to-day tasks and do things that, people usually do. All right, that's what they're trying to get you to think is all-knowing and is godlike.
Yeah.
But that's not what they're going to be, that we're going to be interacting with, like our smartphones. All right. and things like that. You know, those things that you buy and put in your house, and it can talk to you. Google has one. Someone else has one. Okay, those are limited artificial intelligences that they want to tell you have the capability to become even, act outside of itself. That's not true. They will never release that and put that in the hands of the average American people. What artificial intelligence that they are talking about but not releasing is the kind of artificial intelligence that can think and can become self-aware. Now you're probably scratching your head like, huh? You trying to tell me you can create a computer program that can become self-aware? Yep. But it's not what you think. See, there is no difference between what we call science today and magic. They're one and the same. Magic is not what people think it is. Magic is not pulling rabbits out of hats and doing sleight of hand,
Dex,
parlor tricks,
you
and
brought
card
up
tricks.
Dex, you brought up a good point. There's a very intelligent individual said this. He said, magic is just simply high functioning physics.
Correct. But the high functioning physics includes demons and demonology and contact with the spirit world. So the AI they're talking about is going to be possessed with demonic energy. That's what they're creating.
I believe that.
And really,
that's what they want, man. That's what they want. That's their AC right there.
It's already here.
That's their AC, bro.
Yes, that's what's coming. That's what they want to have control everything, and that program or series of programs is going to be the artificial intelligence that kicks off World War III and crashes markets worldwide and everything else. And then they can say, we don't know what happened. They're getting you. They've been priming us for it. Remember the story that came out of Hawaii with the thing that went out over the phone network saying this is not a test. The nuke's on the way.
Yeah.
All right. They said the nuke's on the way. Then we found out the guy said, well, I hit the wrong button. I was on my way to the bathroom. I hit the wrong button. That's not what happened at all. That's not what happened at all. I saw the interview that they did with the guy, and he explained that he followed all his procedures. He did not hit the wrong button. He did the right thing. He knew exactly what he was doing, and he followed the mandates and their script to a T.
Yep.
So the question is, he's the scapegoat for the storyline because they want to push the agenda and get us, used to it. The issue was not did he push a wrong button? No. The issue was the information that he received that caused him to push the button. See, no one's talking about that. If you listen to him, he said he received incredible information, and according to the procedures and the guidelines, he had to send out that alert. Right? See, that's the thing. They did a test without informing the people that a test was being done. And that's what exactly happened. The artificial intelligence sent the message, and then he entered and pushed the button. So think about this. Once everything is handed over to artificial intelligence, okay, this AI thing, what's going to happen when everything becomes demonically energized and the AIs all over the world start communicating and doing things and since launching nukes and all this other stuff? What's going to happen then?
Then one day we'll have to build a robot to fight back, and that robot will come into our lives and says, come with me if you want to live. Come with me, Dex. Dex, hit the floor, Dex. What are you doing? Go now, run to the chopper.
Well, that's just it. I believe that not many days from now, a world leader is going to emerge.
He's going to look like Arnold.
And he's going to have some type of microchip in his head or something. And he'll say, I'm the first, man who is transcended with the machine. He's part of the machine.
As a matter of fact,
he may even claim to be an alien. Who knows? All I know is they've been pushing to energize these electronic systems to do that. And I think it's really disgusting. But just remember, folks, science and magic are connected. All right. That you go back to your ancient alchemy and all that, it's all connected. That's where they got the information to build the technology that we see today. All right. It wasn't just some brilliant person just came up with the idea. Oh, heck no.
Yeah.
Nope. They trafficked in the forbidden realms and received back that knowledge to do the things that they're doing today, just like our ancestors did when they built those pyramids and other things of that nature. So all we're doing is rebuilding the Tower of Babylon.
Right.
Tower of Babel being rebuilt electronically.
Dex, we're at the end of the program, man. Why don't you give out your website real quick and how people can follow you, brother?
All right. That is at pulsewavetrading.com. You can see me on pulsewavetrading.com. And right now, the study course is free when you purchase the weekly Pulsewave price triggers, along with a bunch of other goodies, and also one-on-one tutoring with yours truly, and access to the premium Black Ops trading room, and a whole bunch of other goodies too. And you can follow me on Twitter at the Vulcan Report.
There you go. And with that being said, he is the Algocapitalist. I am just simply the monkey, and we are over and out.
Peace.
Run quickly, Dex. You have to run. I am the T-100. I am cybernetic organism over living tissue. Hasta la vista, baby.
You do that voice great, man.
I'm glad you like that, Dex. Perhaps I can do Bane for you. Tell me, do the Algos feel that they're in charge?
That's what's up.
Maybe we could do a little Vin Diesel. How about that?
That'll work.
You never had me. You never had your market. You used to date my sister.
All right. Do the one where he says, "What did you do? What did you say?" From Boiler Room.
Oh man, I can't. I can't. It's. If it was earlier in the day, I could do it. Vin is hard to do.
Yeah, I know.
He'll go deep, and then he hits in a certain inflection point. It's hard for me to do it. It's got my throat's got to be perfect. So I will see everybody later. Subscribe to the channel, hit the like button, and share with your friends and family. We're out.
Peace.